Let's get back to the markets and talk about them with our good friend Jeff Sica, who joins us now. And Jeff, we've talked about the strikes at Amazon, at Starbucks. Does this mean anything for the economy and the market? Should we be keeping, especially Amazon at this time of year?
Well, Ashley, it doesn't mean a lot to me because two things I need gallons of espresso that I don't have to mortgage my house to afford, and I need my presents that I waited to the last minute to order to show up by tomorrow. But no, in all seriousness, I think what the issue is going to be is that the unions have been emboldened in the last 4 years. Now you have the serious implications. I have a tremendous amount of sympathy for the membership of the unions that are dealing with this inflation, that want better wages, better work conditions. But that being said, President Trump is going to have to walk a tightrope with the unions because they may push him to a point that is not going to be good for the rest of the economy. For example, the longshoremen. I do support the longshoremen. Their pending strike, their contract ends on January 15th. President Trump came out in favor of the longshoremen and their fight against automation. Now, what that might do, the unintended consequence, is that might embolden every union to strike because President Trump's taking this initiative. So we have to be aware of that.
We do indeed. I wanted to also ask you about the Fed basically telling us that interest rates could stay higher for longer. We had that huge temper tantrum on Wednesday when we got that statement on the markets. But what is the outlook for the markets with rates higher for longer? I
think it is an implication that we have to factor in because what we're seeing is that there's so much confusion over inflation, though the inflation numbers are not budging. So President Trump wants to lower rates. He said he wants to lower rates, but inflation is sticky. And if inflation is sticky, the one thing that is going to hinder this market from continuing to make new highs is if that inflation continues to persist. So this is going to be a volatile market. We're going to have to earn every inch in the future. I think a lot of us, myself included, who are optimistic about the Trump presidency and the tax cuts and everything and the deregulation, that have to realize that there's no quick fixes, and we have to be very aware that that there is going to be volatility, maybe more than we've seen in quite a while.
Indeed. We'll have to leave it there, Jeff. Jeff Sica, thank you as always. Have yourself a wonderful Christmas.
You too, Ashley.